Hello and welcome to our end of March update from the Wealthy Doctor Institute. Intelligent investing for the busy professional. We focus on simple battle-tested methods of investing that require up to one adjustment each month to protect and build wealth. I'm David Ye, author of my book, The Busy Doctor's Investment Guide, How One Adjustment Per Month Can Save and Maintain Your Portfolio's Health. Although the strategies in this book are easy to calculate and adjust each month, for those of you who are new to this concept of this book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So for this month, let's go over a couple of basic concepts or questions about the markets in general and Sectorsurfer in particular. And then we'll review our systems, namely the 20-month moving average system, the MRI system, and remind ourselves about the rules for a 25% stop loss system, as well as remind ourselves about the rules for Sectorsurfer. So for the first question is, oh my god, the markets have fallen so much. Why hasn't Sectorsurfer triggered a trade yet? Well, indeed, on March 21st, the S&P 500 did drop 38 points, representing approximately 1.6% drop. Meanwhile, the Dow Jones Industrial Average dropped 302 points, which sounds scary, but I have my own opinions about the Dow Jones Industrial Average. For what it's trying to do, it doesn't measure the markets as accurately as people think it does. And not only that, but it's such a large average that sometimes fluctuations of 300 points gets people all panicky. So when we take a look at the markets have fallen so much, why hasn't Sectorsurfer triggered a trade yet? We have to take a look at, yes, on March 21st, there was this large vertical bar, which is larger than any other bar in the last few months. But then we have to take a look at, well, compared to what? Well, if you take a look at the last year, here's March 21 again, but then you see that several times, particularly September and July, there were also large drops in the market similar to March 21st. But statistically speaking, there was a general uptrend for at least the last year despite these big down days. Now, I've already covered the hypothetical situation. Well, what if we could avoid these big down days, the top 10 big down days back in October? I won't rehash it here, but keep in context, you have a general trend, and then you have similar times when this happened before. Well, what if this was the beginning of a large multi-month bear market? Well, it has to be more than 1 day's worth of drop in order for us to really start considering whether or not it's a bear market. And this is why we have algorithms to help us decide. When we as human beings look at a graph like this, our emotions are hijacked by our limbic system. Fear and greed take over. So if you take a look at what happened since then, here's again March 21st, but ever since then it's been a relatively leisurely rise again. So a trader would say, yeah, there are lower highs and there are lower lows. Isn't that a downtrend? Well, the lines are diverging, and if you really want to trade, you'll look at breakouts and things like that, but we're not traders. We use an algorithm that takes emotion out of investing and calculates a relatively probability rather than that's relatively dangerous or safe to be in markets right now. So the second question is, why did my Sectorsurfer signal to buy FUSEX? Which is weird because FUSEX isn't part of many people's portfolios. But let's take a look. Yes, Sectorsurfer did issue a few signals this weekend, so you might want to log into Sectorsurfer anyway just to make sure you didn't miss a signal. But someone actually sent in a screenshot of what happened, and if you take a look, in this particular account, there's only one free strategy that's active, and it did signal a trade. That's why there's this big red acknowledge trade button issued on this date saying to buy FUSEX. So for those of you who have Fidelity accounts that can handle these particular mutual funds, if you want to use this, it is a free strategy. But if you have a 401k plan that restricts you to whatever strategies there are, you would rather put in what you actually have available to you to see if Sectorsurfer can improve your strategy for you before making it live. And if you have a strategy that seems to work, remember to subscribe to it so you can actually get alerts when trades are triggered. So let's take a look. If you log into Sectorsurfer, the top half shows active strategies, which are either paid or free, and then it shows you what's the current buy signal, on which day it was signaled, along with the day that you actually place the trade. And remember, when you place a trade, click on that red acknowledge button to make sure that it says, done on this day. So if you scroll down the page, you'll see that after your active strategies, you have sandbox strategies, which are strategies that you can play to your heart's content to see if it works for you. And if you like this strategy, you can click on add, and that will add this strategy to your paid strategies. And then Sectorsurfer will start generating trade signals whenever it encounters one. So it's kind of interesting that of the two questions of the month, one was asking, why hasn't Sectorsurfer triggered a trade? And the other one was, why did Sectorsurfer signal a trade? And why was it this particular trade? So the good news is you're asking me questions, and there is a growth curve to getting used to any particular software. So now let's review our systems. Remember, systems objectively look at the footprints of every trader invested in the markets, and then we let the markets tell us what to do. So for the first system is the 20-month simple moving average system. For this one, remember that there is one rule. If the price of the S&P 500 index is above the 20-month moving average, it's relatively safe to stay invested in the index fund, otherwise get out. The 20-month moving average is our safety belt. So here's how it works. For this month, the S&P 500 index mutual fund that is now 218.05, whereas the moving average is 193.33, which means right now the fund is 12.8% above the moving average. So it's relatively safe to be in the markets by this particular margin right now. So remember, the 20-month moving average is currently signaling relative safety in the US stock market. Even though the S&P 500 index has decreased its cushion to 12.8%, that's just because the S&P 500 index itself has been relatively flat, whereas the moving average has continued to go up, which is a good problem to have. That means that we're getting more and more safe in our position as the moving average continues to go up. Remember, this system is not designed to catch peaks. Right now, if it's a peak in the market, we wouldn't know until it's dropped enough to fulfill criteria that it's not safe to be in markets anymore. But until then, don't second guess the markets, just follow the system. So Sectorsurfer's StormGuard Armor has also been showing that it's been relatively safe to be in the markets. In fact, here's the StormGuard Armor indicator showing that it's been relatively safe to be in the markets since December. So our next system is the Monthly Rotation Investment System, or the MRI system. Remember, this system is rotating between three funds: the S&P 500 Index Fund, the Emerging Markets Fund, and the Inverse S&P 500 Fund. Remember, each month rank the funds, sell the bottom 25% of your portfolio, and buy the top fund. So this is what it looks like this month. Last month's data, this month's data. Take a look at the graph. The S&P 500 index and the inverse fund have been pretty much flat. If you take a look at numbers, these are essentially zero, whereas the emerging markets have been going up 2.1%. So this month we have a clear winner. That means last month we were roughly 3/4 in the emerging markets and 1/4 in the S&P 500 index. This month we're supposed to sell the loser, buy the winner. So if we sell the S&P 500 index and buy the emerging markets, we're now at 100% emerging markets for this month. So just as a comparison, Sectorsurfer says rotating these three funds, we should be in the S&P 500 index fund right now. It's a different system, has different criteria on determining which is the market leader. If you're following the Sectorsurfer version, follow the Sectorsurfer version. If you're following my old version from my book, follow that old version from the book. Don't mix up the systems. So again, the observations of this month: The emerging markets are now continuing to show strength, but Sectorsurfer is different. Choose one system, stick to it. Don't mix up systems. So other systems we're monitoring include the trailing stop loss system for individual stocks, and remember, you have your own Sectorsurfer strategies. Make sure that you've subscribed to those strategies so that they actually send you signals. Otherwise, you might want to log in just to make sure a signal hasn't been generated yet. So for the 25% trailing loss system for individual stocks, this is if you insist on buying a stock, remember each stock has idiosyncratic risk. In other words, overnight data on any one stock could potentially tank that stock overnight. So you really want to limit your risk to any one stock to 1% of your portfolio. That means if you put a 25% trailing stop loss order, you can buy with up to 4% of your trading account that one stock, so that when you hit your stop loss, you only lose 1% of your portfolio. Straightforward? So if the stock goes up 33%, the stop loss has essentially broken even, and you can once again use another 4% of your account to buy another bunch of that stock. This way again, you're only risking 1% of your portfolio on any one stock, but now you have magnified amount of stocks to grow when stocks go up. And just keep repeating this until stopped out. I can't tell you how well you're doing, only you can monitor your particular universe of stocks that you're buying. Similarly, with the next system, you have your own Sectorsurfer system. Only you can monitor your own Sectorsurfer system. So remember, Sectorsurfer has two main tools. There's a mechanism to determine whether or not stocks are relatively safe or dangerous, and then, if it's safe, you have a sector rotation system to take advantage of the bull market, and then, ideally, you have another system to protect you during bear markets. So if a Sectorsurfer strategy is set up properly, you will get a signal through email or text. But if you're like me, where I monitor several strategies at a time, I log on periodically, for instance at least once weekly, to make sure that I don't miss a trading signal. So in summary, remember, we've gone over several different systems. Don't mix them up. Even a combined system such as Sectorsurfer, that counts as a separate strategy. Don't mix them up with the other strategies I described in my book. So keep those questions coming. I know I talk to several of you personally each month, but for those of you who have only heard about me indirectly, maybe you got a copy of this video forwarded to you by a well-meaning friend or colleague, here are ways to get in touch with me. Drop me a line, give me a call, email me to set up a consult. A few of you I've talked to, you know your stuff, you're fine. But for some of you, holy cow, it's clear you need help getting your financial life in order. Don't be bashful reaching out for help. The more you delay, the more time is against you. So, until next time, invest safely.